All right, good afternoon, everyone. Hope you're doing well. Let's talk about Bitcoin and dive into the 26-day range that it is finally breaking out of. So we have this 26-day range since the 60K lows, and we've now swept the highs coming up to the MPOC at 73,450, which is a key level I personally have been looking for a long time. And from an Elliott Wave perspective, there's a lot of stuff that we can dive into. So let's just go ahead and get into it. So this is essentially the WXY that we've seen. So we have a larger correctional input. So if this is the the wave 3 bottom down here at the 60K level, we're looking for the fourth wave, and we have a price moving in threes. So an ABC 1, 2, 3. That is the W wave, right? Then we have an X wave, which is the connecting wave to the Y wave, which essentially can traverse as deep as it wants to. Or shallow, and this is a comprehensive extended wave X. So we have a ABC, and then we look for the so that's the 3 3. So 1 2 3 1 2 3, and then we're looking for now a 3 or a 5 wave scenario to complete the 3 3 5 or the 3 3 3. So again, for the Y wave, we've had the bottom of the X, and we have a 1 2 3 potential now at the MPOC, which is a 3-wave structure of a 1 2 3. Or we're looking for a 1 2, looking for the 3, the 4, and then the 5. So that could be the 3 3 5 scenario. So really, in the context of wave 4 completing, I think it is near. I think you give it a little bit of room to breathe here, and you have to kind of play the narrative and the context and the levels that are provided within the structure. For me personally, I'm looking at order flow here. I don't think it's a bad idea to be looking to short here, right? Because you have the MPOC, and whether or not you have a 3 3 5, that's the end of the 3, or you have a 5 wave 1 2 3, that would be the end of the 3, at least in the near zone. And what you can actually do is take a Fibonacci extension pull and look for the 1-to-1 extension. So you take that from the A to the B, or the 1 to the 2, and you're looking for a 1-to-1 extension. So I've already had a 1 extension. Now we're looking for the 1-to-1, the 1.618. So wave 3, right, structurally could come up into, if this is the 5-wave structure that we're talking about, we could have a 1 2 3, and then the 3 could be peaking around, the MPOC here. There's also a VWAP coming in nicely down here, and I believe that is the 0.5 retracement level. So this is not a bad zone to be looking for a short here in the event that you see a 3-wave completion, and then that's a 3 3 3, and now you have a running short from the 3 3 3. Or you have the 5th wave, and that's at least you're going to capture on an intraday short that you can ride down to at least back to 70K zone. And then look for one more pop up to the weekly support level up here, right? So this is a weekly area, then you have a value area range pull that you can now do, and you're looking for a POC. There's also a monthly level just right at the POC as well. So again, that would be a wave 4 completion, or a larger WXY for 3 3 5, and you would swing that back down into the wave 5 target of the 618 and the 66 Fibonacci's, and that's from the bear market blows to the bull market all-time high that we have right now. So that is kind of how I'm looking at this overall structure from an Elliott Wave perspective. I think we have some terminal signs floating around, and really, it's just one of those things that you have to continue to monitor, and you have to play, and you have to kind of at least micromanage for the short term to catch that swing short, to make sure that when you do see a wave 5 potential start to form, you will get some sort of mode of wave sequence into that zone, right? So from an order flow perspective, if we go ahead and take a look at what we're seeing right now, I mean, locally on the 15-minute, you could be getting a 3 drives. This is your first drive up, right? So this is the 15-minute. We saw a nice move up into this, a lot of positive delta, especially this 10 million candle. And then we have a first drive up, second drive up, and a third drive up. So we could be potentially seeing a 3-wave or a 3 drives locally, so which is just an exhaustion pattern. You kind of start to form those diagonals, and you see a bit of seller exhaustion, buyer exhaustion, with sellers absorbing those buyers. And you can kind of see here that you have a high positive delta flush, or a high positive delta bid up into the MPOC zone, because right, this is the MPOC right here, followed by negative delta, another positive bid, followed by another negative delta. Then you have another positive delta move into this, followed by negative delta with a rejection every single time. Good candidate for an MPOC, especially around, or for a 3 drives, especially around an MPOC. But again, it's one of those things you kind of have to continue to monitor and see. Obviously, sometimes that is just essentially a trap for retail. So when you kind of really get into a 3 drives, Typically when we have this one over here, 3 drives, right? First wave, second wave, third drive, down flush into it. You'd be essentially looking for something similar over here on a smaller time frame. However, this could just be a flip to support. 1, 2, 3, and it just could be, again, I like to trade them when they have you can see them on the larger time frame. You can't really see this on the 1 hour. This is the 1 hour time frame, and you can clearly see this on the 1 hour. So it's a much larger, practical schematic to play off of. You could be looking at volume as well, and volume isn't really fading too much on this move up. I mean, you're still seeing buyers come into this, and especially again with when you look in the overall. Let's go into the 1 hour, see what the story is telling us on the footprint. You still have a really nice positive delta. Yes, you have some negative delta coming in, but you still have positive delta. Buyers continuously driving up that price and sellers failing to do so. So overall, for me, I'm being patient at these levels. So what we can go ahead and do is assume that one, you have an MPOC key zone to short, so you can come up and take these 97K VWAP. And again, that is the 0.5 from the wave 2 high of this local wave count. So you have a 0.5 with a VWAP. So essentially, I think the better play is waiting for a move up into this, right? And then you have some sort of SFP. Oops, sorry guys. You have some sort of SFP to look for on the 0.5 with the VWAP. So VWAP sitting at the 0.5, 75K zone. Again, there's other confluence sitting right above it. So we talked about a little bit about that. Let's see here. This is the value area range here, and then the levels and overall point of controls around that zone. So this right here, really good zone, again, for a secondary short if this one decides to fail. So you can be really patient here as we're kind of flipping this MPOC as support. See if price comes into here, rejects. You can be aggressive and play the 0.5 and see if we get a move like this down and start losing these levels here. Otherwise, if we start to see a move up like this, support, bounce up, this would be your good secondary candidate level. I mean, given that you have a rotational play, you could also look to play that MPOC, or I'm sorry, the monthly level at the POC here. So really, I'm kind of looking at this as an entire range to say, we have this larger WXY in the context of a wave 4. Just because we've hit this level doesn't automatically mean I'm going to short this level, right? That's one of those things that you just have to be patient with and just understand that this is a level that is of interest, but it doesn't mean automatically short. We need to look at the reaction. And by reaction, right now, the reaction that we're seeing is that buyers have clearly pushed price above. We're sustaining price above it. That doesn't equal short. And now there's potential from a liquidity perspective to continue to move up and grab liquidity here, tag the 97K VWAP, and then maybe see rejection down into this, and then you could play that of one of two waves. So if you have it like this, you could just simply play the loss of the MPOC and just create a rule that says, I will not short this unless price clearly loses this NPOC level. This is a key level. It's well respected. You can see that price is tagging and hovering above this and reclaiming and flipping as support, resistance, all that sort of stuff, right? You have your confirmation that that's a good level. You could play that, put your stops above the highs. You could get aggressive here and try to play the rejection here and just be sitting on order flow and looking at that. You could also just simply wait for price to do what it's doing and just, wait for something like this, right? And then place your stops here. Now, that covers the scenario again of it being a 1, 2, 3, and all of a sudden you're in a short, and if we just get one of these, right, then you have a nice short setup here, up here, or however you play that. Now, if it does fail and we continue to see strength, well then obviously there's a lot more confluence up north, closer to 77K. Reclaim the 0.5, the VWAP, and you come up into the weekly and the MPOC, and you can continue to assess. Is there strength in this move? Are we seeing a fall off of volume? Is there a lot of negative delta showing up at this? Where is the liquidity sitting? The liquidation heat maps you can use as your friends. I mean, those are really key things. So right now, I'm still not in a short trade. I am looking to short this level or this level, and I'm happy to continue to stay in the long that I took from the X wave low, right? So this was a really great long. This was one of those where I waited for the 618 to be tapped, and finally, you know, we had a front run, come down into it, tapped the 786, came up back into the 618. Yes, we had a bit of a move lower. I decided to remove my stop loss at entry and just let it play out because I had already captured a bigger move TP on this. So I already had secured profits. So half my position's open, and I still had a running short at the time from a 3 drives pattern here. So I'm happily okay saying, you know what, if we come down into this and we sweep these lows, well then I didn't lose anything. I lost a little bit on the profits that I took, but overall I'm still in a winning position from the short that I had here, and I would continue to play it down here, but that didn't happen. So, you know, this move also happened. CME closed right here, and then we had a nuke down because of the Iran escalations happening on a Friday night, right? So, or I believe that was a Saturday, right? So, yeah, Friday night. So you overall had just a flush, a fake out, and that could be your wave 2 up into a 3, or that's just the 1, 2, 3, and that is why I've just decided to leave that, remove the break even, let it play out. That's just how I manage the risk on that. It's not a standard play, but again, that was, I guess, the right play in this context, and I'm happy to do that. So right now, I'm going to let this long play out. I have spot from this initial move down that I accumulated, and my position's around 66K, so that spot position is now about, you know, roughly 10-13% up. And I'm happy to say, from my plan and my perspective, I'm looking for this short here. If this fails, or I don't even take the short, I'll look for a move up here. You know, this is the midsection. I don't really want to take a short here. That's aggressive in my opinion, because we could, you know, obviously reclaim this level, flip it as support, and then continue to trend up. So I'm happily saying I will wait for this level to be lost as support. Clearly, I mean, obviously if we come down and spend time and then come back up, it needs to spend time. It needs to have significant closers, 4 hours and stuff like that. Or I'm happy to wait for 76, 77K. Now, again, I have my longs, I have my spot trades. That's going to protect me if I do take a trade on a short. That price continues to move up and trend and squeeze up, and say, well, maybe this whole count was wrong and this was actually a terminal wave 5. Well, then I have a long running from here and I have spot here, and I'm okay. I'm in an okay position to capture on that move further, and I'm not putting myself in a position where I continue to short every single move up. Because if I entered short here, well, then I would, if I entered just right on the MPOC, I'd be underwater right now. And price does look like it could, you know, continue to trend upward here. So order flows, not really showing crazy signs on the 1 hour of a reversal. Still strength in the move. So overall, yeah, just be aware of these 3 pivot zones to be looking at. I mean, especially the monthly up here, paired with that POC, and I think there's a big opportunity for that swing short setup from a reversal perspective. You have a lot of liquidity built at these lows here, right? So from a short perspective, it is very beneficial to be looking for a short here. Now that doesn't mean it's gonna always play out the way it's gonna play out. I like to short rises, I like to long dips, and that's exactly what I did. You know, I shorted the rise here, I longed here, now I'm looking for shorts here. So, overall, larger WXY. Let me throw this for you guys here. Larger WXY here. Just looking to see if there's a completion on this, depending on if it goes to the 0.5, to the weekly, wherever it's at, and I'm looking for the 333 or the 335. That's where my head's at. Those are my next few plays. So I hope you guys enjoyed this video, and I hope you have a great week.